All right, guys, welcome back to my video. It's been a while since I posted last, and a lot is happening. A lot has happened. Tariffs, trade wars, and I've kind of been taking my time to research, analyze the past, the most previous trade war under Trump's first presidency, which I got for you guys today. And I have basically like a play-by-play, month-by-month roadmap of all that. And by the way, it's very, very similar to today's trade war circumstance. Like, it's crazy. It's almost, I don't want to say the same, but on the current timeline, it's like spot on. So we don't have a crystal ball, but we do have a rear view mirror that we can look at and see what happened in history. Before I get into the roadmap from the first trade war, what am I doing currently? So as you probably saw in the thumbnail, I deposited $125,000 into my Robinhood. Why did I do that? I ran out of cash. I'm fully allocated and I needed some more dry powder. So thanks to the meme coins that made this possible, I took those profits and that money from all that, sent it to my Robinhood, and now I got some money to play with. So what am I buying, and have I spent most of it yet? Answer is no. I still have all of it, actually. I think I probably spent like $5,000 of it buying, just adding some more Tesla shares, but I have been so far focused on cash secured puts. And as you can see here, I've done 3 so far, 2 on Tesla and 1 on Robinhood. Basically, a cash secured put is like you're getting paid to submit a buy offer, like a limit order, and that limit order could be like a low ball. So that's what I'm doing. I'm placing low ball limit orders on stocks I like and want to own more of, and getting paid to do that. So while my cash is just sitting there, I'd rather get paid a little bit just for having it do nothing really. In the worst case, I have to buy X amount of shares and fulfill my promise of like buying the dip, but I'll get paid to do so anyway. So doesn't really matter. I'm still getting paid to buy the dip, or I'm getting paid just to submit an order. Really quick, for those that are interested, cash secured puts. This is one that I did on Robinhood. At the time, I think Robinhood had like a terrible, like 10% down day. It was, let's say, down to like $37 or $38 per share. So you want to deploy cash secured puts when a stock has a really bad day, because the likelihood of it going down even more is less and less, right? So what I said is I'm willing to buy 200 shares, 100 per contract, 200 shares of Robinhood if it hits $29 by May 16th. Now, the cost of 200 shares at $29 is $5,800, right? Which you see right here. And that's the amount of collateral that they took from me to hold in case I actually have to, make do on my promise and buy those 200 shares. So I got paid $419 on the spot for submitting this order. I still have this open. I closed the 2 Tesla ones and pocketed like $800 in a week, basically, for literally just submitting lowball orders when the price was really beat up. And then the price goes up a little bit. I close that position. I don't make back the full amount that I got paid, but I got like 80%. So again, like $800 in a week for just a lowball offer. So you got collateral and you're basically making a promise. And that is what I intend to do for the time being, because I am very cautiously optimistic about the current market, and I'll explain why. But I think in the next 12 months, we're gonna get 1 or 2 months that are really, really red, and that's gonna present really amazing opportunities to buy some of my favorite stocks, probably some of yours too, at a nice little discount. So while I'm holding on to all this cash, I'm throwing out these lowball offers, CSPs, and pocketing some money on the side. All right, let's jump into the play-by-play for 2018. For those of you that don't know, during Trump's first presidency, he did the same thing, right? Initiated a tariff trade war, mostly on China back then. And it is very, very similar to what's happening today. So what I did is I went in and grabbed a timeline and matched it to the price action of the stock market, the S&P 500. And I saw how those headlines every month affected the actual market. All right, so time machine back to 2018. January and February. This is when, at the beginning of that year, he started talking about tariffs. He placed tariffs on like random things such as solar panels and washing machine, but he didn't really target any specific country yet. So it was kind of like loose, just like discussions. Surprisingly, when that happened in January 2018, the S&P, the market went up like 5-6%. February kind of corrected a little bit. And March, if you call that a correction, just like went down 2%. So definitely started some, jitters and anxiety around tariffs. And in March, which is weird because this March, he also, announced the tariffs on steel and aluminum. March 2018, he did the same thing, oddly similar. And At that point, the market was still up on the year, I believe. April, May, and June of that year, very boring. The market was essentially flat. I'm guessing the market had been so good up until that point that people were so accustomed to, nothing going wrong, no big corrections. And then in July, the tariffs actually hit, July 2018. So that summer, the tariffs started hitting. Surprisingly, the market went up 3%, almost 4% that month. And then the next month, another 3%. So up 6% in 2 months. What's going on, right? You have all these tariffs. And this is a great example of why you should not, especially in 2025, do not get emotionally invested in the monthly swings of the market because they're not going to make sense. This whole tariff war thing is like a tennis match. That's how I view it, because it's just a bunch of back and forth, right? We're seeing it in the headlines. 25% on Mexico, on Canada, then Canada hits back, then China hits back, right? It's back and forth, back and forth. So expect the market to go back and forth, but on the up and the downside. It's not going to make sense. A lot of these monthly moves or weekly moves, they're not going to make sense. Don't try to make sense of them. But if you were around in that time and the market has 2 green months back to back during this whole tariff, you're probably going to shake it off like, oh, these tariffs don't even matter. It's not going to escalate. But then if you waited 2 months after that, in October, uncertainties started to spark fear and the market goes down 7% in 1 month, which is a lot for the S&P, right? To go down 7%. So if you had pushed all your chips in that summer because the market just looked good, boom, now all those gains retraced. And then 2 months later in December to finish off 2018, the market goes boom, down another 9, almost 10%, which is a big drawdown for a single month, right? So at this point, if you push all your chips in, you just got to watch the discounts on your favorite stocks and you have no money to buy them. So for 2025, and by the way, in December, even though there was a truce, 200 billion tariff hike, 25% delay, like it says here, the damage was done, right? A lot of back and forth, a lot of uncertainty, because you have like these yellow lines here, they mean tariffs, and this red and green line, they're either agreement or a truce, right? So back then, the year ended not so great. Actually, we have the data here. So 2018 ended down 4%. The market was down 4%, which is not bad, relatively flat. But if you were actually like trying to trade every single month, probably wasn't good for you because there was just like a lot of up and down. But overall, down 4%, that's nothing crazy. Now, let's go to 2019. You know what they say, after the worst months or the worst weeks or the worst days in the market, you know what follows that? The best days, the best weeks, the best month. So you can see in 2019, the first really 4 months, it was nothing but up only, right? Market recovers 8% in January 19, then another 3, then another 1.7, then another 4. So at that point, it's like you're seeing kind of the end of the whole tariff anxiety. Then in May, talks about like truce or delays kind of collapse, market goes down. And if you're very emotionally invested, you're probably looking at this with PTSD, like, oh man, it's happening again, right? But then the next month erases that whole drawdown. And if you zoom out, those 2 years, that tariff trade war that went on for 2 years, the market went up into the right, literally 20% up. And 2019, the market went up 31%. So I say that to say this year in 2025, we're probably going to see a very similar playbook. Market's going to go up, down, have some boring months, shake people out of boredom. Then a really bad month is going to hit. We're probably going to have like 1 or 2. And when that hits, that's when opportunity happens. Like the market's always going to go up and to the right. The market is like a man playing with a yo-yo walking up an infinite staircase. That's my favorite analogy. It's always going to go up to the right. The question is, when it goes down, right, when it has that temporary dip, do you have enough funds to make things happen? So that's kind of how I'm positioning myself with my cash, and I'm depositing even more cash now. So that's the 2018-19 trade war. And when you look at it like this, I mean, it doesn't look that bad. But in the moment, like today in 2025, when you're in the moment, we had a pretty nasty like sell-off in the market in general. But to be honest, it's nothing to worry about, which most people are freaking out. They're always going to call for recession, depression, but I think the market is down like 10%. But on average, on any given year, every year, the average drawdown of the market is around 13%. And right now we're at like 9, a little under 10, so like 9%. So it's literally not even close to like what it should be. Like the average drawdown should be like 13%, right? So the last thing I kind of want to touch on is, or two more things. I think everybody is just too busy on like first level thinking, right? They see tariffs and think, okay, well, things are just going to get super expensive. Companies' margins are going to shrink, earnings are going to shrink. Well, that's not really the case, right? A business's main goal is to jump obstacles and get their bottom line up, right? Keep increasing their profit margins. That's all they do. Like, doesn't matter if it's tariffs, if it's COVID. We saw how businesses quickly adapt, move, reroute supply chains. And from that tariff war, actually, I have a really good case study. It's Nike. So you can see at the end of 2017, Nike mainly made their sneakers in China. And it was like, 45% of them manufactured in China and 28% manufactured in Vietnam. Fast forward to 2021, they saw the tariffs with China during that trade war and said, okay, we need to reroute things, right? Because we can't be way too over-reliant on China. In 2021, they went from 28% production in Vietnam to 51%. So now they started rerouting, okay, we're going to make most of our shoes in Vietnam, where it's not really like a tariff target for the US. There's not really much tension there. And fast forward to today, that number is even higher. So their reliance on China went down way lower than it was before that first trade war. And a lot of companies did the same. And they're going to keep doing that. That's what businesses do, right? So the first level thinking fear is just stupid, because if you think like that's the end all be all, like that was the end of like good margins, tariffs are here to stay. By the way, I don't even think they're here to stay. I think they're just bargaining chips in the end. But regardless, like, you think businesses are just going to if they don't improve their margins and jump over these obstacles, their competitors will. So do you think like they're incentivized more than ever to reroute supply chains or whatever they need to keep the profit margins as they were before or make them even better? So now they're going to get really creative. And one last thing, if you're worried because the first 2 months into Trump's administration, it's like, oh, the stock market has like such a bad start. Well, not really. Let's go back to his first administration. These 4 years, whether it's the NASDAQ or the S&P, were the best 4-year stretches in both, right, in the market in general, since the dot-com bubble, to this day even. Since the dot-com bubble, which was in like the late 90s, as you can see here. You know, unfortunately, I was like a baby/toddler, so I couldn't get in on the internet boom back then. But yeah, his first administration, his track record was really good. Like, I mean, look at just the NASDAQ alone, 31%, down 1%. That was the worst year, right? During his president, just 1%, just down 1%. Then the next year up 38, then 47%, which is insane. And S&P, similar story. So his resume is good as far as the markets go. And I think that administration is like very finance oriented, business oriented. So I wouldn't really worry too much. But I do think there's probably temporary pain for long-term gain as far as like their strategy on all this. So I've been in my research bag the last like 3 months ish. And in my big ideas vault, I've just been pumping out research reports, every single week. I'm trying to get at least 1 or 2. So the good thing is like there's no shortage of amazing companies that you can buy at a fear discount. And that's what I suggest you guys make. So like, let me click on one of these, like Nebius, for example. There's really good companies out there that are also like, I'm not going to get into like the whole AI boom, but that's, another topic I've touched on before. But I think AI is only ramping up, only getting started. So there's like that whole theme of AI investing that I feel like is going to be super hard to fumble, because it's just demand is ramping up so much. If anything, you should be very excited for the next 12 months, because there's going to be a lot of ups and downs. And I think the downs are going to be more exaggerated because fear spreads way quicker than hope does, right? So if I were you, if I was anybody out there in the markets, make sure you get your cash stack up, build up as much dry powder as you can, and be patient. That's what I've been telling my community. We have to be just super patient. Don't buy every single dip, right? Don't push all your chips in. Wait. Trust me, just wait. I don't know when, I don't know what exact month or time period, but there is going to be a really good discount, like a really bloody period. And we're gonna be able to capitalize on that as we usually do. So that is all for this video. Hopefully that painted added some good color to this whole tariff trade war. Also, another video I recommend you really watch is the All In podcast. Let me pull it up. 52 minutes right here, and watch from 52:20 the next like 15 to 17 minutes. You probably should watch the whole thing, but Howard Lutnick gave a masterclass on tariffs in general, and just amazing. So that's gonna, if you have like any anxiety about tariffs, it's gonna make you feel way, way better. There's definitely a method to the madness. So go give that a watch, and see you guys in my next one. I got a lot of content on the way. See ya.